following is an update and technical analysis on the U.S. equity markets, starting off with the S&P 500, followed by the NASDAQ 100 and Russell 2000 futures based upon the daily interval, where we had some headlines rock the equity space with unemployment claims spiking without adjustments, orders for durable goods completely plummeting, consumer confidence taking a hit, and expectations for inflation rising. The current U.S. macroeconomic data does not indicate a smooth economic soft landing, as the two are starting to diverge. We have officially taken out the 45.28 price resistance on the S&P 500 here, and that has been a significant juncture where we actually backtested right off that key inflection point. Long traders, bull traders stepped in really to the button, especially for an active and or quick day trader, right off the 786 fibs. Call it the 44.91 price support, reflected off that key inflection point once again. We're in a stall-like phase, and then eventually, completely with a infused green solid candle close breakout above, backtested it once again, which now became price support off the 45.28 price resistance, was reflected impulsively on a 2-day, 3-day continuation rally here. And I believe this could be the line in the sand for more shorts to get squeezed out if and when we take out that previous reactionary high on a prolonged move right up to re-challenge the primary concealed hidden trend line. Call it a multi-major reactionary high and low concealed trend line, multi-year, cuts through a series of wicks with a ton of reaction, cutting through multiple troughs here, which synchronizes with the 1 fibs retracement, call it 46.11 price resistance, and that is the ultimate, again, last in the sand, ultimate line in the sand and scaling in process for a dollar cost average short trade setup move to the downside. If and when we take out that previous reactionary high on a prolonged move up to there, giving you the utmost, most valuable risk reward setup for a prolonged move to the downside. Long traders, bull traders, take that level out. You are going to increase the odds there for a reaction and strengthen probability of re-challenging new all-time highs from 2021. And that will be the biggest inflection point if and when we come across that influence. This will be the last scaling in process on my end for my short trade position. If we take that level out, the solid candle close up above, and that's when my scaling out process on a short trade setup stop loss will occur. Taking you to the US Tech 100 futures based upon the daily interval, and we've had some reaction, real stall-like effect upon hitting the 16,002 price resistance. And it has been nothing but 3 days of stalling and trading sideways or around this key range. Again, nice clean reactionary high rejection, similar to the S&P 500 in that state, where short sellers may begin the scaling out process or scaling in down on a prolonged setup up to the 16,447 price resistance. That is the ultimate line in the sand. Once again, if and when we go on to take that minor, call it minor price resistance, multi-year off the 2021 reactionary highs, and then it's off to the races. We take that level out, that'll infuse the probability for new all-time highs with no resistance up above, only recreating and strengthening the probability of a party of 1999. Short sellers, they want to see a rejection as of now. If not, then beginning the scaling out process. If not, a complete dollar cost averaging down effect up to the 16,447 for a prolonged move. Great risk reward setup on a short trade setup on a revisiting of the primary reactionary downtrend line off the 2021 all-time highs. And what will be so significant if we're rejected upon the 16,002 price resistance is re-challenging of that hidden concealed primary downtrend line. Upon revisiting it and backtesting it, we had a tight range-bound trading sessions right amongst that range, and it has been completely stalled out, where you have your stochastics 1033 completely flatlining, a relative strength index completely additional flatlining. And that's how you know that level was really psychological, especially when we backtested it and had a green candle infused bullish buy of that setup. That just ultimately the reaction and reflection upon that key psychological level was heavily respected by both buyers and sellers. If and when we lose that steam, we will definitely 100% undercut the 85 threshold in the stochastics 1033, and then we're going to have a retest and re-challenge of that primary reactionary downtrend line. And if we take that level out and have a momentum-fueled overshoot back into the primary downtrend line, you're going to just trap a ton of bulls that took the breakout, took this trade on a prolonged move to the upside, and you would more than likely increase and usher in a waterfall selling of an event right back down to the primary downtrend line and the 786 pips retracement. Taking you out to the Russell 2000 based upon the daily interval, and we have been rejected impulsively off that key inflection point, the 236 fibs retracement correlated with the 1819 price resistance. And that has, especially if you're an active and or day trader, really to the button there, was great for a nice 3.7 sizable, actionable, tradable drop to the downside, with slight damage occurring here in the stochastics 1033 below its 85 threshold. It was a psychological feat to take out this primary reactionary, really a megaphone bullish looking pattern, just a ton of reaction right across the sphere. Took that level out with a green candle close, solid move up above, and was rejected impulsively off the 236 resistance. And here we are consolidating in this phase where long traders, bull traders, they want to potentially turn this segment in this next phase into a what you would call a bullish continuation flag pattern with a perfect measurement, which would exceed right off that key inflection point at the top of the flag for called a 7% move to the upside if and when we go on to reflect that level, and that would give you a perfect measurement right up to the 1899 price support, price resistance, and that would be the more bullish case scenario for the small cap futures here. Whereas again, short sellers, they want a complete rejection and have a continuation of this first line of rejection, followed by a complete outing of that potential bullish flag pattern on a rechallenging of this 1726 price support, and then ultimately the megaphone primary downtrend line off that key inflection point. Big levels to watch, and that was the utmost biggest price resistance that we have seen in quite some time. Call it multi-year, just major reactionary highs and reactionary lows across that sphere, correlated additionally with the 1819 additional price resistance. And again, just a plethora of reaction right across that entire sphere. Taking you to the US Tech 100, back to the NASDAQ 100 60-minute interval futures here. And I believe, again, just a very big divergent high with negative and bearish divergences constructed on all four technical momentum indicators, with the stochastics 1033 that has basically already collapsed as the price action of the indice continues to rise. So again, we are in the beginning stages of snapping the primary uptrend line of this bearish rising wedge pattern. The 16,002 price resistance up above, which is now support where it's trading slightly above it. But again, I think that level, if we can take that level out on solid hourly candle close, that's going to issue in a much stronger wave of selling, in my opinion, to go on to re-challenge a pretty darn good support at the 15,860 and 15,885 price support level, correlated in confluence with the 236 fibs retracement. And that will be the next line in the sand, big key moment for long traders and or bull traders. If they're not able to defend that level, then I could see additional prolonged selling back down to the 618 fibs retracement at 15,500. And that will be the ultimate key inflection point, and some additional targets to be hit if and when we get that breakdown. And then just a wave of rug pull effect. Long traders, they want to completely defend this key level, really at all costs, to avert any potential sell signal and go on to re-challenge either the top and back test of this primary uptrend line, if not completely take it out, re-challenge those negative and bearish divergences on a prolonged setup, on a short squeeze setup, and a bigger, much larger move to the upside, trapping in a ton of shorts. And upon zooming you out, back out to the daily interval, as I continue to engage in dollar cost averaging down my short trade position, the ultimate line in the sand for me in the scaling out process is a breakout above the 16,447. If and when we get a solid daily candle close up above, followed by a strong rejection. If we don't get that rejection, we pop that level and we start rallying up above. That will be the cue to get out of shorts and wait for an additional short trade setup based upon some of the indices. Do not underestimate a re-challenging of new all-time highs into a new technical bull market. Aside from deteriorating fundamental